Eric Mother, Mother.com, for the weekend of February 27th and February 28th, 2016. Let's take a look at markets here with about less than 30 minutes before the close of Friday's session. The Dow is slightly down, 0.3 down. Nasdaq is up 0.21%. S&P 500 is up 0.15%. And the VIX is also up slightly, up about 3%. So pretty much let's call it a mixed bag and slightly unchanged for the most part, coming into the conclusion of what has been a good week. So let's take a look at the charts here. We begin by taking a look at the Nasdaq, which for the week is showing a nice gain of about 2%. And now the question is, what's the next move? I think what's happening here is the market is coming back to test a declining 10-week moving average. Somewhere in that range is the 10-week moving average. And as you can see there, that's where the market is coming to test that. And I can show you that somewhere around here on the weekly chart, there's some type of resistance. And you can see this if you take the recent RSI highs on the weekly. Just draw a line like that. So this is where the market is coming in contact with that. And also there's a line coming back from 2011. So the line comes and makes a contact somewhere around here again. And I think there's also another line. So, and I'll show those lines coming back from 2011 on the Nasdaq. If you draw a line on the weekly RSI, all those lines are coming in contact, intersecting right now where the Nasdaq is closing for the week, which I think is a suspicion here that the market wants to pull back. So let's take a look at that 5-year weekly chart for the Nasdaq, and this is the line in front of you. It's the chart in front of you. Let's go and show the line where the market has been bouncing since 2011. So this has been the line of support, as you can see. So for those of you who are new to this analysis, the RSI has been holding here. I call this a uniformity line because every time the market hits that level with uniform action, there tends to be some type of a nice bounce. And even here, triple bottom support for the lows there. And now we are trying our best to hold above that line. So if the market can continue building above that green line, then this is good enough support. Now I did show a line connecting recent RSI highs there, and now there's another line connecting the previous break line on the weekly. So all those three lines, as I just discussed, come in contact and intersect right there. So what I'm getting at here is I personally lean towards a market that could stall from current levels. Keep in mind that we are coming back to test a declining 10-week moving average. One of the reasons why I'm leaning towards a pullback is because if you take a look at the recent break in the RSI, and we can draw this break somewhere around here in December, RSI broke down. There was a prior trend here. Subsequently, the market broke through that, and it was somewhere around there, which brought the market off the highs of late November, early December. Draw a line from there, and you can see that we've hit resistance once before here for the highs right there. And of course, we know that that led to a significant drop since then. And now we are coming back, and I think what we are doing over the last couple of days is forming a double top. So as long as the market is showing resistance on this red line, we have to assume that the next swing trade for markets are down. If the bulls want to really be in control, then they have to most definitely clear that red line. So until we see the market push above that red line, the assumption here is that the market is still looking to stall and probably test some of these recent lows since the lows of mid-February. If we take a look at the Dow, we can see that the Dow had made a lower low on a monthly closing basis going back over the last 6 months. And while this was taking place, the RSI was showing an improvement, which might be the reason why since about 2 weeks ago the market hit that level and we've had a nice bounce. So now the question is, what's next? And I think here we might start seeing signs of a potential resistance, and I'll show you a couple of things here. Is maybe not, but we can see that there was a recent break here, and this break led to this nice move from here all the way to the nice move there. And so we can draw a line from there, and that market has responded to that line already. right there with a double top, a double bottom. So that sets up for a nice potential move higher. We shall see. What is really a problem for the market is the daily charts, just like I did show you on the Nasdaq. We can see that we broke through this trend line here in December. We draw a line from there. So the daily charts are presenting the market with a little bit of a resistance right there, with the Dow being slightly down on Friday. It looks like it is coming back to show resistance at the same level where it has been stalling since the break in late November. Resistance on all these highs have led to a market pullback, or even here off the highs there, and now we could be forming a resistance on this level. So as long as the markets are trading below the red line on the daily, one has to assume that markets have had a nice move higher, but now they are coming back and stalling. Keep in mind, we are also testing a declining 50-day moving average net. If we see resistance and the market pulls back from current levels with a declining 50-day moving average, which is pointing down the net, we still have to assume that this market has a lot of work to do to repair its charts. One of the encouraging things we saw over the last couple of weeks is, if you take this daily closing low right there in August, I believe it was August 25th, 2015, you'll see that the market has not closed below that. It held and did not close below that price since then, and also here did not close below 2015's daily closing low. That was good action. In fact, we can see that the market also made a slight lower low in price, while the RSI was showing an improvement. That positive divergence has led the market from moving here at about just slightly above 15,700 all the way to the highs here of 16,800. Let's call it about 1,100 points. Nice move over the last 2 weeks. But I think right now we are getting a little bit extended, and probably the next swing trade might be down. We can see evidence of this on the hourly chart for the Dow, because here the market is making higher highs in price on the hourly chart, but the RSI is not moving higher. So this negative divergence could be one of the reasons why the market is pulling back and showing a little bit of a drop on Friday. At this rate, one can assume that this will continue pushing the market lower. Keep in mind that it also happens to correspond very nicely with this line here, which has been a problem for the market. In fact, it was a problem for the market in late December during the highs there. So as long as the market is showing resistance on those two lines, the red line and the blue line showing negative divergence, more than likely net we are still looking at markets that are generally, in my opinion, pointing down after a nice recovery over the last 2 weeks. If we take a look at the Dow Transports 2-year weekly chart, connect the highs on the RSI on the weekly, you can see after moving from the lows here over the last 1, 2, 3, 4, 5, 6 weeks straight up, the market is coming back now and is going to be testing that line there. So that could be a problem and could be a reason why week to week we might stall as we begin the new week. And here also, unless the market can clear that line, I would expect resistance. In fact, let's take a look at a 5-year weekly chart for the Dow Transports. Let's begin by drawing that line, connecting RSI highs. And also there's another line which is a back test. So you can see here we broke through here. So this break brought the market off these highs here. Sometime in April, May of last year, we can draw a line from there. And you can see that we failed to hold above that red line for the highs here in October, November, and of course since then we had this drop and a reversal. Right now we are coming back and testing that same line. So I think if you take those two things together, there is a bearish argument here for the Dow Transports to start pulling back after 5 weeks of positive back-to-back gains. And I think the best way to show what I just did is to show you on a 2-year weekly chart. We'll go back to the 5-year. 2-year weekly, there was a break here in, let's call it May. Draw a line from there. You can see that every time we stall back below that red line, we stall. as we did there for this pullback. We are coming back to test the red line. So testing the red line, which has been bearish. There was also a slight break of a trend there, and now we are coming back to test this line. Keep in mind, we already talked about topside resistance. I think net Dow Transports are suggesting after 6 positive back-to-back weekly gains, maybe the next swing trade is gonna be for downside action. So that's the bearish case. Let's take a look at the bullish case. On the Dow Transports, if you go back to this entry on the chart for late 2011, and we can see that that began a very nice move in the market, moving the market obviously from here, nice run over the next couple of years. If we draw a line around that line there, we can see that the market's been bouncing on that line, so somewhere there. You can see nice support here for the lows there, support here for the lows there. We touched that level for the lows there, and we tried to hold here as best as we could, but the market would bounce for slight positive gains for the week. Finally, we broke through that green line, and so if we can hold above that green line and continue building onto this, that could be positive for the market. So also want to show you a long-term monthly view for the Dow Transports, and I've discussed this over the last couple of weeks. If you take that line right there, maybe slightly lower, let's just go. So Dow Transports monthly going back to 1990, so this is a long-term view. Every time over the last 26 years or so that we hit this line, the market would be in a bearish market and it would bounce. And even here we had a nice double bottom for the lows of 2003. Uniform activity below the green line and back above it. Here in 2009 for that entry. We touched that line in late 2011 for the lows there, and now we are holding on that line. So if you're a bull, you'd like to see the market hold this line and continue building on this month to month. So if you're a neutral, you have to be aware that if this continues being the case on the Dow Transports month to month, we are probably seeing that the market could easily, I guess not easily, but could over time see higher prices. So the green line is giving market bulls a reason to suspect that the market could actually bounce from current levels. Let's take a look at a 5-year weekly chart for the S&P 500. 5-year weekly S&P 500. We made lower lows on the weekly price, but the RSI made a nice positive divergence, which might explain why we've been up the last 2 weeks. That's good action. Also, if you go back to this entry here, this entry of this nice move in 2011, the market hit a major low, and of course, as we've been discussing with the other markets, we had a nice market run. We draw a line from there, which is uniformity line, and you can see that the market has been respecting this line over the last 4 or 5 years, bouncing with success every time. Even here, the market went higher for a couple of weeks. Here we are showing a nice double bottom support. So in fact, if I was given this chart and no other chart, I would play the market to the upside, because this is a very strong looking chart until we can see other things, or until we can see the market break through that green line. This chart by itself is very bullish, and so we have to be aware that if you're placing bets on the short side, you might want to use some stops, as is always a recommendation. Why? Because this weekly chart is very encouraging right there. That's very good action based on the previous 5-year market analysis. Now the problem is, if you go back to the daily, we can see short term there's a reason for a pullback. So short term, a little bit confusing here. Take this break. The break comes from this trend line break there, And of course, as I've shown in the other market, since that break, this RSI, this line has been a problem for the market. The highs there for December, if those of us who saw that resistance were not surprised by this drop, and now we are looking at the market coming back here and probably forming a double top. So market bulls would like to see the market clear that red line, otherwise this again becomes resistance. So market bulls would like to see that resistance violated to the upside, and if you're a bear, clearly you are holding on to the fact that if this is confirmed as resistance, then the next swing trade is going to be down. So either confirmation for a move lower or for a breakout for a continued move higher. Keep in mind, we are coming here and testing a declining 50-day moving average. That means that net we are still looking at markets that have a lot of work to do to repair their charts. If we take a look at the SPX on an hourly chart, just want to show you again, simple analysis, making higher highs in price, and technicals are not moving higher, which is negative divergence, which generally means at the end of the day, hourly charts are suggesting lower prices. Take a look at the 30-minute chart for the SPX, and we can also see here making an improvement in price, but the technicals are showing negative divergence. Net the 30-minute charts and the hourly also showing that the next swing trade for markets could be lower, more than likely. In conclusion, the strongest case for market bulls is if the S&P 500, Dow and Nasdaq can hold RSI 50. So if the market can bounce on this 50 level on its monthly RSI, that is the strongest case I can find for market bulls to be excited about upside potential. And so the risk is, if you're a bear, that the market bounces on this 50 line on the monthly and moves higher. That would set the stage for a strong bull market, while at the same time the risk is that the RSI could break down to fresh 3-year lows again, which would be a fresh sell signal. Keep in mind that the MACDs for most major markets continue to be trading at 3-year lows, so the risk is still to the downside, net with a chance of recovery. Take a look at the S&P 500 long-term monthly picture, and you can see that since 2009, every time SPX holds and bounces back above the 50 RSI level on the monthly, we get a strong reversal to new highs. We touch this line here with uniform activity below 50, back above 50 for a move back to new highs. Here there is an opportunity for the market, if it wants to show double bottom support, and this double bottom support, if it happens and if it holds, that would suggest that it is not out of the realm of possibility that the market has enough energy after finding support at the 50 level. So let me draw that 50 line. So if the markets continue holding that 50 line and bouncing, and they hold, it suggests that it is not out of the realm of possibility that we eventually go back to all-time highs. So that's the risk. Both bears and both bulls have reasons to be concerned around here. So ultimately, at the end of the day, gotta make sure you have your stops in place. So the monthly charts playing around here, we'll see which way the market goes. But for now, the market earlier in the month looked like it was broken, but I have to say, pretty impressed by the fact that the monthly is showing signs of holding the 50. If it holds, be aware we might have a rally. Otherwise, if we crack to 3-year lows on the RSI, then the bearish case becomes even louder. Eric Mwadhe.com. As always, good luck, peace, blessings. I am out. Enjoy your weekend. E-A-C-S. Yes. Mwah.